9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Man with David Ingles.
Happy Friday and good morning to all of you. Counting down to the open of markets in Greater China. Our top stories today, stocks across the Asia-Pacific under pressure. That's after stretched tech valuations and also signs of a cooling U.S. labor market weighing on Wall Street. Bonds are rallying on bets that the Fed will cut interest rates.
Tesla's shareholders approved a $1 trillion pay package for Elon Musk, the largest payout ever for a corporate leader.
Also ahead, data due today will set to show China's export growth is slowing, with U.S. trade falling sharply. That's ahead of the trade truce.
And how foreign businesses in China are navigating economic and geopolitical headwinds. We speak to Coach China and the EU Chamber of Commerce at the International Import Expo in Shanghai.
Good morning. Welcome to the show. So what we're seeing pretty much across asset classes, and we'll get to some of the commodities in a moment, which are doing something else. But really, equity markets are following what we saw overnight on Wall Street. Europe also got hit quite badly. We're down 1% there, although it does seem to suggest, when you look at futures right now, we do seem to see some buying coming through there. So this might end up being, when you go into the rest of the Friday session, ending on a positive note. We'll see what happens. But Asia, though, as you can see in some of the tech-heavy plays here, are seeing a lot of pressure right now. Nikkei's also off 1.5%. Let's flip the page, please. Let's have a look at where you are in the 10-year. So I mentioned the follow-through in equity markets. It's the same thing when you look at bond markets, right? So bonds are rallying. You had this rally in treasuries. We're down on the 10-year yield. We're back below the 4.1 handle. We were above that, of course, going into the session this time yesterday. The pricing around the Fed for the December meeting has gone up from 60 yesterday. We're about 70% right now. That takes us into the dollar story. We're still broadly higher on the dollar index for the week. That would make it 3 weeks in a row. Rate decision, of course, coming out of the Bank of England yesterday. So we did manage to bounce following that trend lower in the last few weeks. 130 handle, 131.28 right now on cable. Very quickly, the approach to the open today. A50 futures, a pair we're tracking very closely today on the back of this sort of idiosyncratic dynamic on the strength in the currency, Chinese currency, weakness in the yuan. Also the opposite sides of, sort of direction of vol there. 10-year yield in China, 1.8. We have bond auctions today, 1 and 2 year. And, of course, this is also something we're tracking. I mentioned commodities as well, roughly at about multi-year highs here on prices of aluminum. So, yeah, lots to watch going into today.
Yeah, the standout in Chinese equities was certainly one thing to watch out for to see if it continues, right? At a time when Korea is selling off some of these big AI darlings, China still seems to think things are looking pretty stable. This sort of slow bull market seems to be working in some ways. In terms of what to watch in your agenda here today, we talked about the equity rally. Certainly that's one thing to watch as we wrap up a really busy week here in Hong Kong, listings and all the like when it comes to robo-taxis. In terms of stocks, so we talked about XPeng, Hua Hong Semi, their earnings came out here, did show that they might be lagging in this whole sort of chips race in China. SMIC is certainly in focus as well. We are expecting that trade data as well as Chinese inflation data coming out on the weekend as well. Hainan related stocks. So the president made a trip there talking about how this is going to be a center of industrial upgrades. So certainly look out for those Hainan related sectors to possibly benefit from this as well. Aluminum, certainly one in focus, and we're still going to be covering the CIE in Shanghai as well today. But yeah, it seems like all systems go when it comes to China here. We'll have Paul Dobson coming through here. He kind of phrased it very beautifully about how things are still kind of set up to look pretty positive in this equity rally.
Yeah, I think if you look at the correlation between, say, greater Chinese benchmarks relative to the rest of the world, still correlated but not as tight.
Yes.
So you do see, of course, that sort of hedge when you look at that. And certainly we're seeing that we did see that play out in equity markets yesterday, where every single stock in the Hang Seng Tech Index was up.
Yeah.
Although volumes were on the lighter side, so I'm curious to see what that's going to look like today. We're almost done with the earnings season. We have the big ones, of course, next week. But I think Hua Hong Semi is going to be interesting, the reaction there. SMIC did very, very well yesterday. But yes, apart from that, I think we also, just to mark some data that's come through here, okay, that's a bad one. Okay, this is out of the Philippines. 3Q GDP, the estimates were for 5.2. What we got was a 4% handle there. Q on Q, half of what was expected. weakness in the currency coming through. So we'll get into the numbers, but just looking at the spread between the actual and the estimates, that seems to be quite a big variance from what was expected in the markets. Market opens up, of course. Plus, I think there's a big IPO as well here today. So something to watch going into Friday.
Yeah, you mentioned about the data. I mean, it brings us back to what we saw in the U.S. overnight, right? This kind of trio of signs that we got from the private data did suggest that maybe things are softening the labor market. That's why you started to see that buy when it comes to treasuries once again. But it's so mixed, right? We just had the ADP report yesterday that said had stronger sort of print there when it came to the labor market. So I think it's difficult for the Fed to really decide, just based on this private data, whether they can actually cut next month or not.
There's not enough. Even the markets are bouncing between the two extremes almost on a day-to-day basis, right? So yesterday we were talking about almost a coin toss. Probability, and that's now gone up to 70%. It's rare that we even look at, I think, the challenger set of numbers, that's the private jobs numbers, which doesn't tend to historically
We rarely look at it, right? Yeah.
Yeah, but then here we are, because it's almost like a dearth of information out there. But yes, we are tracking that. On the Fed, we're 4.1%, so all things equal, will they lean towards a cut? Because it seems to be a weakening as far as that's concerned.
What's this Jenga economy that we've been talking about?
Yes. Well, okay, the most extreme example of that was this pay package, of course.
Oh, yeah.
That was approved, right? $1 trillion. And then on the other side of this Jenga totem pole, if you want to look at that, is really the middle class going down even further of people just simply making it difficult really to make ends meet, right? So I think that the way the story phrased it is actually quite nice. People are having to pick, I think, between dinner and car payments. So, which is really, I guess, a stark contrast to the $1 trillion pay package, which is, of course, very, very extreme and a longer term, which we'll get into, of course.
We'll talk about Tesla in just a bit here. In the meantime, let's get you caught up with how the state of play in markets is. Let's bring in Pruksa Iamthongthong, head of Asia-Pacific Equities at Aberdeen Investments. It's good to have you here in Hong Kong. This is coming at a time when people are really questioning the valuations of some of these sort of AI tech darlings that really outperform for much of this year. What has Aberdeen been doing in the face of all this volatility now?
Yes, so we have been looking at the current earnings seasons very carefully, and as you can imagine, we are in the midst of the tech earnings seasons, both for the key suppliers like Taiwan, Korea, which reported over the last 2 weeks, as well as for the US hyperscalers. And I think the summary of all the results have basically shown that things are still looking pretty robust from a fundamental perspective. And I think the key takeaway is that where we are today, we are getting increasing visibility about the growth in 2026. So actually, all the signs from a fundamental perspective is pointing to a stronger year in 2026. I think what's not very clear is about how will 2027 shape like, and the valuations have run ahead. So I think from our perspective, given how fast the market have run, there might be a little bit of a hiccup. I wouldn't be surprised with regard to that, but we will see this as a long-term buying opportunity because we do think fundamentals are still stacking up.
You mentioned some of the AI supply chain markets like Korea and Taiwan. People seem to be looking at AI valuations, and there seem to be only, and I think it's erroneous, just very extreme versions of it, right? It's either you're in a bubble or you're completely depressed. How would you describe valuations? Do you see room for compression? And might be a separate question. Do you think they're overvalued? Which is a somewhat separate question to the first one.
We don't think they are overvalued. We do think they are probably at the fairer stage than they were at the start of the year, especially when you look back, at the Liberation Day, that was a big sell-off under a very different circumstance. So we do think that as long as fundamentals continue to grow and that remains supportive, we should continue to see valuations go up. I think there is a bit of a discrepancy between where valuations of tech companies in Asia and in China are at versus, say, the tech companies in the US are at. And I think from an Asia point of view, the relative valuation that we are having today does give a bit of a buffer while fundamentals remain quite strong. So you can tell that we are on the positive side of the trade.
Okay, in terms of how to play and position around the AI theme now, what's sort of the advice to clients?
From our perspective, we do have quite a good position on a broader perspective. So you have the semiconductor supply chain, which plays into the infrastructure layer. We look at the application layer, which people might have forgotten, but China Internet is actually one of the main players and the key drivers within the application layer, which we do think that the ability to monetize what they have invest in the infrastructure layer is actually very strong. You have the broader ecosystem, which you talk about. Nowadays you are starting to see that power is the real bottleneck as well, and you have the power equipment supply chain. You have the energy storage system that will be part of the power equipment. So we really look at things from a broader perspective rather than just the actual tech sector as a whole.
And outside of that, are those still going to deliver the alpha in China? I mean, is it time to be looking at cyclicals, or is it are you not seeing that in the data just yet?
I think we are not really seeing that in the data just yet, but it's actually looking pretty interesting. And I think this is really because on the cyclical front, activities have been quite slow, and understandably so, given where the tariff situation have been at. Today we are getting more clarity than before, and what that means is that as a business and the companies that we talk to on this trip as well, they are looking to continue to their plan, and it's business as usual, right? Once you have the tariff in place, you now know how to plan your supply chain, and therefore you will continue to diversify out China.
Tell us about the trip. So what's the sense you're getting from this as you meet clients and companies?
Yes, so I was in Shanghai and Suzhou earlier during the week.
Interesting picks, okay.
Yes, meeting the team, but also meeting some of the companies there, and it's a variety of companies. But I think generally what the companies have been seeing are more on the AI and semiconductor side. And what they are saying continues to be very much what we have observed in the overall market, which is demand remains to be pretty strong. Some are in short supply, and therefore they have to make prepayments. And I think that very much is a good sign with regard to how tight the supply chain is, right? And those are the broader data points that you don't get unless you start visiting to companies and then you start talking about them about all the softer data points.
I was going to ask you about what we saw. I mean, you started to see maybe, as you mentioned, China still offers those AI opportunities. Coming at a time when I'm looking at a market like Korea, where volatility is picking up, and massive sell-off in some of these really big names that have done so well, and in contrast, China actually has been seeing volatility head lower. What do these dynamics tell you about where's best to kind of position and kind of hunker down as we count down to this year?
I think it still comes back to fundamentals, because what you have described is really just about a rotation in the market from things that have gone up and is looking slightly more expensive to where things that have been sold off and perhaps have been not looked very closely, like I think China volatility has come down, but from a very high base.
Yeah, you still favor Korea though.
We still favor Korea, and within Korea, I think it's not just about the tech trade in Korea. We have the value up trade that has been, I think, not talked about much because of the excitement surrounding tech, but I think if you look at the Korean financials, the insurance companies, or even the cyclical like the shipbuilding companies, they are all really willing to come up with measures to improve shareholders' return as part of the overall government campaign to really increase their dividend payment. So I think we do see quite a big change there, and we are excited about the value up opportunities in Korea in addition to the tech opportunities.
Last question for you. Southeast Asia, what's pretty there going into next year?
Southeast Asia, I think what's pretty is the valuation. Again, a forgotten region. I'm from Thailand, and Thailand has been one of the weakest performing markets for quite a long period of time until we have a change in government. I think what you see with Southeast Asia is that the positive side of things, you have pretty good rates cut backdrop that is going to stimulate the economic growth. And with that, you have the government stepping in various countries like Indonesia or Thailand to really drive on the fiscal front to stimulate the economic growth. So we do think things are looking pretty attractive, and growth is coming back, supported by the government.
Pruksa, very nice to see you in town. Next time you're in town, let us know as well.
Thank you very much for having me.
Pruksa Iamthongthong there, head of equities Asia Pacific at Aberdeen Investments. Right, just ahead, in fact, just on that note we were just talking about there, the power deficits on the AI play. BofA has a fantastic deep dive into this, what picks they're watching as far as that play is concerned. AI capex they see topping $1 trillion in about 5 or 6 years. Matty, Zhao joins us at those times on your screens. Counting down to the open of trade, 15 minutes away, Shanghai, Shenzhen, and Hong Kong. The Friday session is upon us. As with the weather, this is the China Show. All right, some strength in the last couple of ticks here, last few moments or so. We're looking at the fix of the day, 7, very convenient, 7-11. 39 was the range. We are getting one at 708.36, so relative to 711.39, that is still on the stronger side of things. Okay, let's help you get set up for the trading day ahead. Joining us from Singapore is Paul Dobson. Paul, good morning, sir. The rally in China yesterday on price, quite decent. I think every single stock on the Hang Seng Tech, I was told by my producers, was up. So market breadth was okay. Volumes were on the lighter side of things. What would you guys be watching today?
Morning, David. Watching for the follow-through, how resilient is China relative to the rest of the world? I think it's looking like a pretty good place at the moment. And the reason that I say that is not just on the stock side, where you have the tech story performing well again and the sort of push for independence and for development still scooping up investment interest, but also on the currency side, we're looking at the yuan appreciating against the dollar, but also against peers across the region. I think just about a record high against the Korean won, for example. So there's signs of confidence there. And also, we saw that absolutely humongous demand for the dollar bond that was issued yesterday, but also in the local government bond market, pretty decent support there too. So China's markets are having a little bit of a moment where they're seeming resilient. So I would like to see, can they continue to perform when you have the drawdown from or the drag from US markets and global markets, and how resilient are they in relation to the rest of the world right now?
Yeah, it's interesting to mark this resilience that we're seeing in China. I mean, it's not all perfect, though. I mean, you highlighted it's all kind of set up and the stars are aligned, but we're still seeing some wobbles in the property side of things. What are still some kind of key risks we have to look out for?
Yeah, I think you're right to draw attention to the property side of things. We saw Vanke getting another downgrade this week to CCC with a negative rating outlook. So as close basically to a D as you can get, I think. So that's a concern. That market still hasn't turned around completely. There's still companies that are needing support, and you have New World as well rumbling along in the background. But I think that the market has moved on and it's looking forwards instead of that, looking at the growth story, looking at the push on industrial strategy that we're seeing, and you're seeing it in local commodities prices as well. Aluminum at a one-year high for China. So people kind of, passing over some of those risks. The IPOs that we saw this week, the two robo-taxi firms, you might point to that and say, that's another negative pull. Yeah. What about those ones? But I think that's a kind of individual story. They're competing against each other. They're going neck and neck. And perhaps, the market doesn't particularly like that narrative of everything happening at the same time and too much competition and too much conflicting evidence. I think that in general, outside of those small negatives, there's more positives to be latching onto just at this moment in time. And I think, overriding everything, you have the trade truce, and we're still getting more kind of details of how that's moving forwards in a positive way. You've got the fact that China came out of that looking pretty strong as well, having stood up to Trump and, got compromises on both sides. And then you have, the tech story, which is really driving the narrative forwards. And you have this renewed confidence in the industrial strategy that's giving people a sense of purpose.
Paul, thank you. Paul Dobson, have a great weekend there. As, of course, we talk about some of those robo-taxi listings in Hong Kong, we'll see if they have what happens on day two. Overnight, they sold off quite a bit already when it comes to Pony AI and WeRide. But yeah, Tesla certainly had some news this morning, right? Shareholders have approved that $1 trillion compensation package for CEO Elon Musk, the largest payout ever awarded to a corporate leader. Let's bring in our transport reporter, Danny Lee, with us. It came with a lot of caveats, I guess. But what comes next now after this is approved? Well,
Elon Musk has to deliver on all of the expectations. He gets this biggest corporate award. But it's the milestones that will come next. Tesla's currently worth $1.5 trillion. He has to then get it to $2 trillion and has to deliver on certain goals, including effectively doubling and tripling sales over time and on certain products. But as Tesla pivots from just an EV company to something that's more related to autonomous driving, robotics, there's a lot he now has to deliver. So there's a lot of pressure on him. And as he said, if he didn't get more control over Tesla, this pay package wasn't awarded, he wouldn't stay. So he now has to deliver on that.
What's the update on FSD?
So he said some interesting remarks. He's saying that he had been told by the Chinese authorities that FSD could be approved by February or March next year. So it's significant that we have waited all of this time and we could see the light at the end of the tunnel. But beyond that, this could actually help Tesla maybe revive some of that slump in China sales. So that's important. And particularly as we are seeing all of this competition in autonomous driving and these various tech that these Chinese players are coming out with, driven by the likes of WeRide and Pony AI and more, that this could help Tesla kind of find a bit more of a firmer footing in somewhere like China.
Danny, thank you so much. Danny Lee there on the latest out of Tesla and the timeline, potential working timeline as it pertains to FSD there, Feb and also March. Going into the open today, not a lot of movement on an index level. We did flag earlier on, we were watching, and we just talked about EVs there in cars. XPeng is one to watch, big pop overnight, and it's coming up on your screens quite shortly, I believe. XPeng is the only one that's actually seeing substantial up. There we go. We're up 5% in your pre-markets. Plenty more ahead. This is the China Show. Welcome back. Okay, what's with the weather today?
Rainy.
Windy.
Dreary.
Get us to the weekend. No, in fact, if this weather is waiting for us at the weekend, get us to Monday. Words you rarely hear. No, actually, always hear from us. 0.8% to the upside. So we are giving up some of the gains yesterday, very, very early, of course, on Friday. There wasn't a lot of volume. Just keep that in mind. I think we were 30% lighter than the average given the rally yesterday, so we'll see what happens with that. Turnover, though, onshore continues to remain robust. I think we did another $2 trillion yuan day, rather, in mainland China yesterday. So obviously you want to watch some strength coming through in the currency following the fix, although we're flat from the cutoff here.
All right. In terms of analyst actions, Hua Hong Semi got a big one from Citi here, upgrading the stock to a buy, raising that price target on expectations of a structural improvement. So 105 is the new price target. That's from $45. So that's a substantial kind of upgrade there on the back of this kind of gradual GM upgrade trend. That's really what they're flagging here. Gross margins is one thing they're flagging. Baidu also 8 shares raised to a buy at Deutsche Bank. I believe the ADRs were also raised as well overnight. And Zijin Gold rated new outperform at BMPP there.
Okay, some of the stock reaction. Hua Hong should be on the way down. CATL want to watch, of course, given, of course, the updates on the lithium mine that we are seeing some upside. A little bit of upside, 2%, and XPeng, of course, following the move up overnight going into today. SMIC not on your screens, but one to watch as well, given the massive move up yesterday and some of the day twos. Here we go. Well, day twos and day threes on series. And
all still looking bad for Pony AI and WeRide right now. We got the open coming up next. This is Bloomberg.
Good morning. So just the full session is just ahead, the final one of the week. Some weather's coming through. We'll start big picture and then we'll get into the micro in a moment with some of these stock movers. So on the macro side of things, softer U.S. numbers, higher expectations of a Fed cut in December. As far as China goes, any time this morning, in about 30 minutes or so, we should be getting the trade numbers for October. And apart from that, going into the weekend, Yvonne, we are looking at the inflation print. I think that's on Sunday. Yeah,
so expecting in terms of the trade side, exports might slow down. There's some seasonal factors there. Yeah. When it comes to the deflation story, maybe that might have eased, but not really seeing that much improvement. But certainly we're going to see if the fundamental story changes there in any way. But certainly when it comes to markets, it has been this kind of this contrast that you're seeing when, you know, the rest of the markets are seeing a sell down or people questioning this whole AI capacity spend and whether it's actually bearing any fruit here, you are starting to see signs of maybe China has that bit of resilience here, right? Relatively speaking, we're still dealing with, you know, moderate losses here right now. We're down about 0.5%. It's pretty slow going so far, but we're tracking very closely, of course, some of these big sort of micro sort of themes, right? When it comes to earnings with chips, for example, CATL, right? So we're watching those A shares. We're slightly to the upside here right now. Looks like we could be seeing some gains here. There has been some key progress made in that mining rights application. So some analysts say maybe that means that that lithium mine that was shut and suspended since August, we could be back online maybe by the end of this year. That's the expectation. We'll see if that actually comes through. But we're watching some of these local chip names like Capricorn here. That's slightly lower. We're watching, of course, how Hong Kong fares here, given that it was seeing quite a bit of a rally here yesterday when the Kospi was seeing that sort of meltdown and volatility was shooting up that way. Hang Seng, as well as what we're seeing in China, was actually heading lower in terms of vol. So is this sort of slow bull market actually getting some traction? Let's flip the boards and see how Hong Kong is looking like here today, because yesterday that rally was quite pronounced here, despite some of these listings when it comes to robo-taxis seeing a pretty bad first day of school, right? But right now, HS Tech, you are seeing a bit of red there. We're down about 1%. What's driving that are the Alibabas. We're down 1.5%. Meituan, also 1.5%. We have GDU coming on talking about that pair trade, right? Long Alibaba, short Meituan has been very good for many that have bought that. But we're watching very closely when it comes to, of course, Tencent as well, and as Xiaomi. Xiaomi is down some 2% here this morning. So there you go. We are seeing tech, mostly speaking, is lower. Baidu, though, is a standout. Take a look when it comes to some of these semi stocks as well, because Hua Hong Semi, SMIC did report yesterday. It seems like out of the two, Hua Hong did show that maybe things are looking a little bit in terms of behind what we're seeing in the whole kind of domestic industry compared to the likes of SMIC. So it was a miss on Hua Hong, a beat when it comes to SMIC, but both stocks are actually lower here this morning. Interesting enough, Citi had a very good call here when it comes to an upgrade. We're talking about a buy there for that rating. Then they raised that price target from 45 to 105. So certainly that is more than doubling of the price target there. They're talking about structural improvement when it comes to Hua Hong Semi in particular. But right now, chips not in favor here today. You take a look at how Hainan stocks are doing. So the president made a trip there to the area, and they've been talking about how this is going to be the center of an industrial upgrade. So they're talking about a free trade zone, the like here in the development. Obviously, we are seeing some of these Hainan-related stocks that are rallying here. Hainan Development, for example, is up 6.5%. Hainan Straight Shipping is also up close to 4% here right now. We talked about aluminum, right? So it's not just the equity market. It's not just the bond market. You know, of course, China returning to that dollar bond market had a really good day as well. You know, as Paul Dobson mentioned, you know, the stars are really aligned when it comes to China, that maybe things are looking pretty more favorable here when it comes to the year end. Aluminum is also at one-year highs, right? So we're also watching that. A pretty mixed picture right now when it comes to some of these aluminum makers and the like, but certainly that's going to be one thing to watch. As, of course, we look at all things, right? David, when it comes to this kind of quarterly run that we're seeing on Chinese stocks.
Yeah, the seesaw, value versus growth, and what wins. And I think we did see some a bit of sunlight, let's put it that way, for a few weeks on some of the value plays. There's an overlap between that cohort and some of the income and dividend plays. But then you take a look at how it's done on a quarterly basis. You look at a spread there, value versus growth. You do the spread, then you do understand why value has become more, well, pun intended, more valuable as it pertains to that. The best quarterly run against the growth peer gauge in about almost 3 years. Let's call it that. All right, investors redirecting these flows. This rotation following uncertainties lingering over the trade deal with the U.S. Let's bring in Jeannie, our stocks reporter, here with us to take us through. Yeah, so we did see a rotation. Does it last, I guess? And why did we see that? What was that? What was the main reason there?
Yeah, I think we began to see that rotation around mid-October when, you know, there were so many concerns about, you know, the China-U.S. trade conflicts, and then we've seen the momentum kind of accelerated in recent weeks or so because, you know, given all the third quarter earnings, you know, people, you know, especially the funds that has piled into those AI names, you know, in the first 3 quarters, they suddenly realized like that, you know, those high expectations might be hard to be justified. So there's kind of like a mismatch there, and suddenly the market turned more like a risk off, and they're kind of seeking shelters. And then on the other hand, we had the 5-year plan, announced by the Chinese government, and then there is some expectation for those, for example, like SOE names, get certain like policy support in the longer term. So we've seen this rotation more like driven by both, like tactical rotation, but also like some fundamental structural reason behind. So, and that means like this kind of rotation could be a little bit like longer than expected, than people thought. So it's not just like, seeking safe havens in the market, like seeking safe bets, on the valuation concerns of the AI names.
Yeah, even within the tech space, right? People are questioning how to kind of decipher the winners and losers. There's this interesting kind of pair trade where you're long Alibaba and short Meituan. That's done very well for a lot that have kind of betted on this earlier this year. Why do you think it's worked, and what are analysts saying about it now?
Yeah, I think it's, when it comes to food delivery war, I think people are like, picking the winners, losers. Meituan, like they're facing a lot of challenges from Alibaba, since Alibaba has began, escalated the price wars with Meituan and JD.com in April. So we've already, it's almost half a year, since the price wars, and there were a lot of bets about, this price war may have already reached its peak, because for the fourth season is it's kind of like a low season seasonally for the price war, for the food delivery giants. But then on the other hand, during the ongoing Singles Day, there were a lot of new signs that this war is not actually taking a pause. It's actually going to different areas, kind of like expanding, when those companies seek growth in very sluggish consumer sentiment in China. So when we talk to investors, they would think they would kind of adjust their expectation and thinking this long Baba and short Meituan trade can actually extend at least through the second half of this year, and then because Alibaba then needs to expand the quick commerce business so that they can secure more traffic for their bigger online platform to achieve their synergy.
All right, Jeannie, thank you. Jeannie, you there, Asia Stocks reporter. On all things when it comes to tech, we're going to focus on that theme, and we're getting some reports here this is from The Information. Yeah. And what they're reporting is the U.S. is going to be blocking Nvidia's scale of its scale-back AI chips to China. The chip in question is known as B30A. I think that's how you say it, Dave. But this is a downgraded version of the Blackwell, but it is still far more powerful than the other chips that the U.S. government is currently allowing Nvidia to sell in China. This was the one that was supposed to be tweaked, right, in hopes of that the administration was going to change their mind. Looks like they haven't just yet, Dave. Could be a big blow for Nvidia.
Yeah, and we're barely 2 weeks from that meeting, and already we're getting things like this that indicate that, it's not going to be as smooth sailing as I guess the mood from the meeting suggests, as far as the relationship is concerned. So, can I ask for an intraday, please? I want to show our viewers of what the reaction looks like here. So the Nasdaq futures are now, as you can see, we're down. It probably was because of this report, because I'm looking at my chart here, and we were at the start of the show. If you remember, we were materially higher on these things. We're now flat on S&P, and we're now down on Nasdaq futures. So it does seem the market is somewhat reacting to this, just looking at the chart itself. Thank you so much. There we go. Down all the way.
Yeah, and what's different about this one, right, this B30A, is something that Chinese developers desperately need, according to this report, because it's a bit different. It can be used to train large language models when efficiently organized in big clusters. That's something that China doesn't have domestically right now as well, so certainly that's one to watch. Certainly we're going to talk a little bit more about that and what this means for Nvidia coming up. This is Bloomberg.
Right, welcome back. So China's Singles Day, the shopping festival, is well underway as the country looks to boost consumption. For a sense of how foreign brands are looking to take advantage, Stephen Engel, of course, our China correspondent, is at the China International Import Expo in Shanghai, and Steve was in Lululemons and leggings, and he's now shifted to leather. Steve.
Yeah, that's right. So we always come to CIIE and come to, in this year, Hall 6.2 to see and get a pulse check of the consumer in China and the luxury market. And this year is no difference. And yesterday, Lululemon, today, we're going to be talking Coach with the China President, Liliana Lucioni.
Perfect. Hi.
Thank you for having us here in your tabby bag booth here at CIIE. Give us a pulse check. How is the luxury market doing right now? It saw a little bit of a pickup, but we all know that the spending by Chinese households is depressed. What are you seeing?
That absolutely is correct. The market remains challenging. We have seen some gradual improvement over the past few quarters, primarily driven by all the policies from the government to push consumption.
Is it working, do you think? Is it giving confidence for people to spend more on more luxury items rather than go for cheaper alternatives, the dupes or the ping tea? You know these trends.
Well, I would say consumers are very smart and they're very cautious with their spending. So while overall traditional luxury remain challenging, we see brands like ours winning in this market. China is our second largest market after the US, and we're coming out from very strong quarters of growth.
How is the brand equity right now of the designed in America brand equity? Obviously, we've just come through very turbulent times with tariffs and anti-US sentiment and all that. How do you weather that, and how are you seeing people willing to buy an American brand?
I would say people look at the story behind the brand. So what we focus at Tapestry is making sure that we deepen our connection with consumer. We have a strong focus on Gen Z. So one of our key priorities is to understand how we can be part of their daily lives, and that's how we want to connect with them. So we take it away from being an American brand. It's more about the values that we want to provide to the consumer. We are a New York-based brand. We focus on product innovation. We focus on compelling stories. We focus on building emotional connection with consumer. And our target audience, which is Gen Z, is responding to that. That's why I think our growth trend and our recent trends on new acquisition, on sales, are showing an inflection and an acceleration in this market.
Are you cautiously optimistic then this peace between the US and China can last and removes that uncertainty? Now, I know you don't make your bags and your products in China.
Correct.
So overall, what has been the impact of tariffs on confidence and your business?
So last week in Busan, we saw the president shaking hands. I think that to me is a sign of confidence. I believe that they will figure out good ways to partner. Of course, we want to stay cautious, but so far we don't see too much of an impact in this market. We have a very diversified supply chain as well. So we are taking our actions to make sure that we protect ourselves, but at the same time, seeing the leaders getting together, opening themselves to conversations is a promising signal.
I read some comments recently from October, I think from Tapestry CEO, is it Todd Kahn, who essentially said, in this tariff environment, he's more happy to be in the $300 to $600 range than the $3,000 range. I'm not saying you're an inexpensive brand, but are you, for this this economy right now, in sort of the sweet spot? And you mentioned Gen Z.
Yes.
Your sales are really driven by influencers and that Gen Z who like your brand. So would you say you're in that sweet spot?
Yes, so for us it's meeting the consumer where they are with the right product assortment and the right price point. So we don't have the ambition to sell expensive brands that they may not want to carry because they're too precious. As I mentioned earlier, our objective is tapping into their life, providing the right functionality, but really the right products, and beyond that, making them feel confident.
How's Singles Day doing? I mean, it's a period now. It's not just one day on November 11th.
It has become, a month. So Single Days 11/11 is huge. Of course, a lot of customers are buying. Still, there is a lot of buy. That's the key of Double 11. We have a strong presence on online platform, and we are making sure that we are driving right sales and right equity.
Is it better than last year?
Yeah. It's growing, so we've seen an inflection on sales. I would say the whole market for Coach is outperforming last year sales. So it's beyond Double 11. Double 11, it's a point in time that we want to win, but overall the growth is quite promising.
Liliana, thank you so much for your time here on
pleasure.
Bloomberg Television. And,
thank you.
No, guys, I cannot bring you back a tabby bag, okay? Can't do it to you. Yvonne, back to you.
What about Brooklyn bag? Are there any Brooklyn bags around there?
That's it, Steve. We're no longer friends.
Great interview there. Yeah, it looks like you're having a blast at CIE, though. Great boost there. Looks like fun. Our chief of Asia correspondent, Stephen Ingle, there, going shopping for us. Yeah. Just, window shopping at least. And there's more coming up from CIE, though, in Shanghai. We'll take the temperature of business ties with the EU Chamber of Commerce as tensions simmer over issues including overcapacity and trade in rare earths. This is Bloomberg. Well, China is reporting trade data later on today with both exports and imports expected to grow at a much slower pace on year compared to the previous month. Let's bring in our China correspondent, Min Lo, on what to expect. It seems like that sort of strong upside surprise we saw last month might not be sustainable. Why?
Yeah, and a big part of it is because we had a very, very high base last year. It was the highest export print that we got in more than 2 years, because that was when the front loading just begun, when there was a lot of anticipation that President Trump might win the election. So that is weighing on this October's export numbers. You add to that, this number was, it was just before the trade talks between U.S. and China, and, before the dialing down of tensions, there was front loading that has already been taking place many months before. So it looks like overseas importers of Chinese goods were just taking a little bit of a pause there. Plus, you add to that, there is also the Golden Week holiday, which is another seasonal disruptor to the numbers as well. But we also have the imports numbers coming in, expected to be just above 2% on year. So continuing to be very weak, and again, reflecting that weakness in domestic demand despite some of the government efforts so far to try to boost spending.
So after this, I think, when we get to Monday, inflation's also something we're going to be unpacking. Give us a sense of what to expect.
Yeah, inflation is the same thing, right? We continue to see weakness there. Yes, it's expected to ease a little bit. CPI expected to come in at negative 0.1%, but still in negative territory, right? Especially the PPI, I believe it's negative 2.2% when it comes to the forecast. And this is, it's been the trend since the start of 2023, 2 years, 10 months now that we're seeing negative deflation on the PPI. And Bloomberg Economics believes that there is no way we're going to see the GDP deflator turning positive before the end of the year. And they also said that a big reason is because we're seeing a widening income gap in China consistently over the past 10 years. So it's a structural issue, not a cyclical issue. And this is one of the biggest barriers to why those government policies so far is not enough to lift spending. Because if the poorest people, their income is not moving up, they are the ones with the biggest propensity to spend, and their incomes are just not catching up with the higher income people in China.
All right. Thank you, Min Lo, there, our China correspondent, on what to expect in the data coming up as well.
Okay. Huawei suppliers in focus coming up on your screens, and we're down just about across the board there. We're down about 4%. How many versions of this phone? Anyway, the ultra-thin iPhone rival, $590. this could also be just a broad market drawdown, although Sunny Optical is somewhat also an Apple story. So it's hard to sort of disentangle, but it's doing business, of course, with both. Lithium stocks in focus, CATL, and this really sets the stage for a conversation I'm really looking forward to having in the next hour here.
Yeah, Matty Zhao is going to be joining us to talk a little bit more about where to now in this whole AI trade. And she says, look, the one thing that China has a competitive advantage of is power capacity, right? So it's really more about the energy infrastructure that we need to kind of focus on as well. Of course, that is her bread and butter. CATL, though, the news on possibly they've made key progress on this mining rights application, that hasn't really been actually boosting the stock of CATL per se, but it is actually boosting some of these lithium stocks as well on that progress. But it's supposed to be that they were going to fall, but they're actually heading the opposite direction here right now, Dave.
Okay, just very quickly, we're looking at markets in the Philippines. There's an IPO, I think the biggest one of the year, Manila, is nothing happening there. Okay, which is a good thing if you think about juxtapose this against the broader backdrop of a market that is at a 3-year low. It took us a while to get here, but that's all to say the bad sentiment in the market was just backed up by bad economic data. So the growth itself, slowest in 4 years, slowest since Corona, going back to 2020. The miss was actually also quite something. So it didn't just slow, it slowed a lot more than forecast. So the bar you see on the rightmost side of the screen is one standard deviation. That's the spread between actual and the median estimates, and this one actually coming in 1.2 below the median. So it was statistically, as you can see, something that the market clearly did not see coming.
So obviously the scandal, they say, definitely weighed on the growth picture, but also this might actually bolster the BSP now to actually look at more interest rate cuts now, right? That may be more warranted to support the economy. The economy has also been hit by the likes of tariffs. Typhoons have also battering the nation as well. So there you go. Where you're seeing a bit of weakness in the peso here this morning as well. We'll have a lot more on the way in the next hour. We're talking about AI, right? When we talk about, it's not just about the whole hardware side of things.
It's not just IT. There's an energy
the power grid that we have to really focus on in China as well.
And there's some individual names that they're putting forward and how to play that outside of China as well. So Matty Zhao will be joining us for that conversation coming up next in the second hour of the China Show.
Welcome back to the China Show. Here's a look at the HSI half hour to the session. Oh, happy Friday. But before we get to the end of the week here, it seems like we are dealing with not just some bad weather, but maybe just bad sentiment overall. We're seeing stocks here in Hong Kong down about 0.6%. The tech space is selling off here. So at a time when you have concerns around AI bubbles, about soft data out of the U.S., seems like there's not much good news out there here today.
No, and people are continuing to book those profits on a week where, if you think about, most benchmarks are actually slightly higher for the week, but volumes have not been there. And you are getting, I think it's been a while since we've seen a streak of at least 3 days of gains, which I guess underscores the amount of vol that's out there so far. Volumes today in Hong Kong are down about a fifth still, so we're down 22%, underscoring that point. The headline that broke about 30 minutes back, and the Nasdaq's coming up on your screens, is one of from the information of reportedly the U.S. is blocking the scaled-back AI chip meant for China, and we did see a dip in Nasdaq futures since we bounced off lows. We'll get more context on this in a moment. Now, speaking of tech, Nikkei, Kospi, and TAIEX gauge is coming up on your screens, and as you can see, some pressure coming through there. Kospi is down, the Nikkei is down about 2%, and Hang Seng Tech is reversing, I think, at this point now about half of the gains we had yesterday. So we're down about 70 points. Asia Pacific, we're down about 0.7%.
Yeah, I think the whole kind of information report about even the scale down Blackwell chips are not possibly going to be able to go into this Chinese market. That's going to be another blow at a time when sentiment is already really bad when it comes to these frothy valuations around AI and the like. And I think that's why you sensed a bit of a change in tone from Jensen Huang this week when he spoke to the FT about this race between AI and between U.S. and China. Before, I think he mentioned it was really just kind of the gap was going to be closing very soon.
Yeah.
This week, it was about China actually now winning in this AI race. And I think it's a really push, I think, from Jensen Huang and a big message for the Trump administration to reverse some of these chip export curbs.
Yeah, he was clearly not on the fence this time.
Not happy about what happened at Yeongju, I'm guessing. Or
no,
Busan.
and like, you know, with this news today as well, and I think to your point, I had to look at the SOX index overnight, Philly Semiconductor Index. Actually, we have a full day left, but it's still on track for the worst week since about May. 30-day volts actually also picked up since about the high since that point. So clearly the news flow is not going to help that at all as well. So it's a bad mood, and this is something that we will be going into, of course, with Matty Zhao in a moment, because they have a fantastic report on how much capex they see in AI and how much China is a part of that, and you know what beyond IT and data centers and hyperscalers, what else do they recommend as far as how to invest around this as well? Let's bring in Mark Cranfield in Singapore for us, our MLive strategist. Mark, yeah, the DJ's put on quite a bad track today. How long does this last? This is last going into early next week. How long do you see this?
Yeah, let's hope this is not one of those 45-minute sequences where it's just all boring music and there's no light bits in between it. You know, we need something to cheer us up here. It looks like it's just one of those weeks where people are trying to look for the negatives. And as you're talking about the Nvidia story there, it's actually a bit of a red herring. But on a day like today, people might make more of it than they really should. I mean, Nvidia company themselves recently have been saying they have pretty low expectations for what they're going to get out of the Chinese market in the near term. President Trump didn't discuss the Blackwell chips with President Xi. So the fact that they're telling us in this report that the chips are going to be blocked, I don't think anyone will be surprised about that. But in a day when people are looking for excuses to lock in the context of what has been a tremendous run in financial markets over the past few months, if you look at you've got the NASDAQ futures on your screen there. If this was a really shocking story about Nvidia, those futures will be down 1% already, and there's no sign that people are panicking there. In terms of Asia, people are much more interested in what's happening with the Korean market. That's been the leader for sentiment across the region for some time. Now, if the Kospi stays about where it is now, it's going to lose 3% this week, which will be its worst week for several months. The last time it had a 3% decline after several weeks of winning was back at the end of March, and then it dropped about another 8%. So you can see why people are getting a little bit edgy about Korea. It's quite a good leading indicator, at least in the near term. If sentiment is changing and Korea has a bad finish to this week, we would expect follow through for the next couple of weeks. And it's a very big weekend in the United States. The shutdown is really getting into a very crucial stage. Thanksgiving is approaching. People are already reducing the number of flights starting from today in America. Well, imagine if we're still got a shutdown, we're coming to Thanksgiving, which is such a huge travel period, and they're having to shut the number of flights. People are going to be very unhappy in the United States. And that's really going to fuel a lot of mood music for the market as well. So this weekend, we really need to hear some progress on the shutdown. And as you were mentioning earlier, people are also pretty concerned about the private jobs numbers that we've seen out of the US week. They were very weak.
Yeah, and I think you're seeing mixed signals here, what we got all week when it comes to the labor market as well, which I think Goolsbee mentioned. It's hard to kind of gauge where the next cut's going to be if we continue to just rely on this private data, Mark. I want to get your call on Korea. That was interesting, right? Because at a time when things were melting down yesterday, China was sort of the standout where we actually saw a massive rally. But today it seems like China's kind of joined in on this sort of downdraft as well. What do you make of it?
Actually, although the Chinese markets had a reasonable day yesterday, if you look at the Hang Seng Tech Index in particular, which is quite a good indicator of the momentum stocks related to China, actually that peaked a few weeks ago. And it's actually starting to look like we're in a mini bear market in the HSI Tech gauge, which is not a great sign for the other markets, for the Hang Seng and for the 8 shares index as well. That has clearly turned lower, and it wouldn't take too much more before people are talking about proper corrections, maybe even small bear markets going on in the Chinese tech sector. We do have the big earnings coming up, Tencent, Alibaba, JD.com, all coming up relatively soon. They really need to post pretty good outlooks. They may well do. And we've seen that from the other Asian companies, Samsung's, Hynix, those kind of guys, been pretty upbeat. But if we don't hear very positive comments coming out of the Chinese tech companies, we could be in for a pretty rough month. especially if the American markets are not cooperating as well. So next few days, the next bit of earnings, pretty important for how we go into the end of the year. If we're going to have a good finish to the year, it's very dependent on hearing very good outlooks from the Chinese tech companies.
Yeah, and in a lucky 13 days, Mark, Nvidia reports, I believe, on the 20th. So let's keep our fingers crossed for that. Mark, just a final question for you. I'm looking at Japan. We're down 1,000 points in the Nikkei. That obviously just is an exaggeration given where we are on an absolute basis. But what's going on in Japan there? We look at SoftBank, Advantest, some of the momentum plays are really coming off. Yeah, they are similar to, I mean, they're taking their lead from Korea to some extent. Actually, the earnings season's going pretty well in Japan. There have been more beats than misses. We've got a very big week next week. We've got 3 of the 4 big heavyweights, SoftBank, Sony, MUFJ Financial, all reporting next week. SoftBank is the one that could probably cause the most disruption. The stock's having a rough day today. That's obviously very tied to the AI story as well. But once again, they may surprise. Companies in the AI space are consistently doing that. So a lot of people will be watching the earnings in Japan next week. But it's been a good season so far. And that probably means there's limited downside, especially with the yen is going to stay weak for quite a period of time here. The Bank of Japan looks as though they're going to defer rate hikes into next year. So there's no immediate threat to the Japanese currency.
Mark, thank you. Mark Cranfield there, MLI strategist, joining us out of Singapore. Yeah, not a whole lot of good news out there. Kind of depressing me. Let's talk a bit more about AI, though, and maybe other ways to kind of play it around that theme, right? Coming up, BofA Global Research joins us next as we dig deeper, right? You know, they mentioned about powering up and cooling down for AI data centers here. They're really talking about the energy infrastructure. Maybe China has an upper hand here when it comes to the whole power grid sort of thing. And on the cooling side, things like materials that will literally be cooling stuff down right, on the back of that. But it's also a hot trade. There we go, according to Matty, Zhao. She's coming up next. This is Bloomberg. Welcome back. You're watching the China show. Yeah, chips have been in the news this week. You had, of course, those comments coming through out of Jensen Huang that really made the rounds. When you look at this, is the 30-day vol gauge, actual vol of the Philly Semiconductor Index, highest since May. By the way, on price, it's also set for its worst week since May. So things have started to brew a little bit here underneath the hood. And it kind of. It's interesting, right? This all kind of happens on the same week that Jensen Huang made these comments that is making some waves, right? When it comes to, he says China will win the AI race now. It's a very kind of different tone than what he said maybe just a few weeks ago. You know, before it was about narrowing, that gap was narrowing. Now that he actually says China will win. Well, Michael Deng from our Bloomberg Economics team kind of talked a bit more about that, right? And he mentioned, look, this declaration that China will win the AI race thanks to its energy infrastructure advantage, that is a dire assessment of America's competitive position. But his diagnosis tells only part of the story. But he says, yes, when it comes to energy capacity, China wins over the U.S. But when it comes to computing, that's still going to be the edge the U.S. has at the moment in this race. But let's focus on the whole energy side of things first and foremost. Let's bring in Matty Zhao, co-head of China Equity Research and head of APAC Basic Materials, Oil and Gas Research at BofA Global Research. Your report just talks specifically about that, right? The benefits of it for China is that they do have low power costs out there. How do you see this whole power generation capacity? How is it like in China? And how does it compare to the U.S. and maybe other parts of the world?
Yeah, sure. So we just published a report called the Powering Up for AIDC. And we are expecting the global needs for AIDC of power to grow 2.2 times in the next 5 years. And China is quite power up in this competition. So we have the most secured, you can say, the power grid, sophisticated power grid. And we have a much lower cost of the tariff as well, power tariff. China is around 30 to 50% cheaper than on a power tariff. In terms of the grid age, China is below 20 years. US and Europe are between 40 to 50 years, so quite aged in the grids as well. China also has a very strong power equipment, like, for example, transformers, etc. And a lot of Chinese transformers go abroad as well. And lastly, also the ESS, the energy storage. So energy storage has become more and more important. important during this AI race as well. And China actually did a lot of exports into US and Europe after fulfilling our own needs as well.
How much more capex needs to go into, I mean, already developed infrastructure in China, but that's going to keep going up, relatively speaking. So how much money needs to go into that space?
Yeah, sure. So we estimate this year just the direct use in the data center will be about 600 to 700 billion RMB in the capex, which is equivalent to 90 billion US. And we expect this to grow at about 29%. 29% CAGR in the next 5 years to around 330 billion total capex for the whole AIDC. Out of this, about 1/3 will go into this infrastructure side, i.e. power, cooling, energy and constructions, and metals as well. So by 2030, we are basically looking at just this power and cooling sides of around 800 billion RMB markets.
Wow. Tell us about the cooling side, because no one really talks about this. What sort of metals do you think are going to benefit the most from this sort of cooling demand?
Yeah, so for cooling, so actually cooling need to go together with power because power generates a lot of heat. So basically we need to cool it down as well. If you look at a survey, actually every 10-degree increase in temperature will reduce about 50% of stability of the data center. So cooling is actually getting very, very important. Currently in China now, we're still using a lot of these air cooling, so like the air conditioner now in the studio. But with data center development, higher power intensity, especially with the more advanced chips, we will need a lot of the liquid cooling, i.e. the water going into the cooling system. So currently, we expect this cooling market to grow at 40% plus CAGR in the next 5 years to go together to solve this intensity of power generating more heat as well.
So what's the play on cooling? Because you can't go long on water. So yeah. So what's the specific play there?
Yeah. So we have like NVCool, we have Shenlin, this type of key players and also in Taiwan we have AVC, Aorus as well. They are the key players of cooling. Like for example, NVCool has already entered into the Nvidia supply chain as well. Yeah.
I mean, everyone obviously is questioning right now the valuations when it comes to AI. How much interest are you getting around your expertise now, which is the power grid side of things?
Yeah, so I think lots of interest, a lot of, calls. We can't actually handle so many incoming calls, I have to say. So in terms of the valuation, if you look at the power transformers, like for example, Siyuan, Huamin, Jinpan, these are key power transformer who are doing a lot of exports. They are currently trading at about 28 to 32 times 2026 PR. So not that excess if you compare to a lot of the chips who are above 60 times, right? So they are up a lot, but not that expensive. Like the energy storage, like SunGrow, the leaders, is trading at about 21 times. And then if you come to the metal front, who will also benefit a lot from this data center, like the copper guys, like Zhiji Mining, were trading at 12 times. The aluminum guys were trading at about 10 times. So it's basically not, well, you can say much more attractive compared to the software and IT related.
And is the premise too that China exports many of this capacity outside, or does it have enough need domestically to take up that supply?
Yeah, so for the ones that outperform, the shares that outperform mainly are the exporters. Because, so I take energy storage as an example. If you export to US and Europe, you earn 4 to 5 times higher margin compared to what you sell in China. So if you, so say take SunGrow, 60% of its, shells actually go exports as well. So you earn probably much higher margin compared to the one who are only selling domestic. Similarly for the transformer, if you sell in US and Europe, on average, you probably earn between 40 to 50% margin. In China, you earn 10 to 20% at best. So, yeah, so exporters still earn a higher margins as well. But actually, so what I'm saying is actually China is powering the world, not only powering China. Because like, for example, the energy storage, the ESS, this year, the export double. And the transformer this year export up 40%. So, so those ones were actually because US and Europe and the rest of the world are all building up these power equipment sites.
Do you see any sort of risk that could derail like all this investment that is going into the space right now?
Yes, the risk, of course, it's probably that a lot of the Mega 7 or the major companies actually slow down on the capex in the next few years, because it has been very, very strong. If you look at the capex growth this year, it has been very strong as well, looking at the major Chinese internet company announcement, the government announcements. But I think even if we have the risk, pick with the high quality ones, pick with the ones that valuation are not that excess at this moment, and probably can win towards the bump. I don't think it will be and AI will be the long-term trend, right? You will have some fluctuation in between. So that's why I think the high quality and then reasonable valuation is important.
Yeah. 30x, not 60x, right? Which is relatively speaking. Matty, thank you so much.
Thank you.
Matty Zhao there, co-head and gas research at BofA. Right. Xi Jinping wants China's Hainan region to become a free trade flag barrier with zero tariff policies expanding from 21% to 74%. More on how companies are racing to seize new opportunities in the region coming up. This is Bloomberg.
Well, the U.S.-China Business Council says there's cautious optimism after President Trump and Xi struck their trade truce. We spoke to Council President Stein at the International Import Expo in Shanghai and asked if commercial ties are showing signs of recovery.
It has absolutely been bogged down. And American companies have been very much on tenterhooks, wondering which way things are going to go. What I think is interesting is after Korea, the Chinese government has already tried to send out signals that we welcome American business and we want you to be here. I mean, case in point, we're at their giant, import expo. We have more American companies here than at probably any other trade show in the world. And last night, the Chinese premier comes, and who does he visit? He visits 3 American medical companies, sending a really strong message that, hey, we value you and we value your investment. So the Chinese side is trying to reassure American business. But American business, while they see the deal that happened in Korea as the best possible outcome, there's a question about, is it going to last?
Right. How long will it last?
Well, we've seen this movie before, right?
Yeah.
2 days after Geneva. Geneva lasted 48 hours before it melted down. And I think Madrid lasted about 10 days before we started to have real problems. And so while there's hope that this time it'll continue, there's still going to be a lot of guarded, cautious optimism, at least until April.
Not asking you to take a political position here, but do you think in Washington they underestimated China's position and levers of strength that they could possibly employ going into this trade war?
I think there were 2 problems. I think one problem is I think the United States may have overestimated its leverage and how worried China would be about U.S. tariffs. And I think they underestimated China's counter leverage.
Right.
But at the same time, both sides have the ability to do enormous damage to the other's economy through export controls and other measures. And I do think that both sides have sort of looked over the abyss and said, maybe that's not where we want to go. And so both sides have realized, yeah, now's the time we can pull back. The question is, can we stay pulled back, or are we going to get into another escalatory spiral?
What are you seeing internally in America against the backdrop of these national policies? Are you tangibly seeing regional blocs looking for their avenues into China? I'm not necessarily saying trade deals from the Pacific Northwest. Say, for example, Washington state officials are here, Oregon state officials are here. Look at what's happening in the Midwest with those soybean farmers maybe feeling they're not getting their voice heard. Are you seeing sort of regional blocs talking to the Chinese officials, talking to the Chinese companies, and trying to get some sort of favorable deals for themselves?
Okay, let's not name names, but I'm seeing some nervous governors. 800,000 jobs depended on trade with China. And those jobs are starting to go away because U.S. exports to China and U.S. exports to other regions are going away because of high tariffs in the United States. And so I'm hearing about nervous governors who are asking us, how long is this going to go on and where's the light at the end of the tunnel? I'm hearing it from members of Congress on both sides. So I think that, yes, we're not at the point where I think we're seeing regional blocs, but I do think we're seeing governors starting to think about how can I continue and protect the jobs that we have that are tied to exports to China.
Last question for you on the high tech. Obviously, Donald Trump was talking about possibly putting Blackwell chips on the table. I think maybe his more national security hawks in D.C. convinced him otherwise. But how do you see China's leverage increase tremendously through the DeepSeek moment and its confidence in AI to the point where they don't necessarily need that chip?
I think you hit that on the nose. And that is, my job was negotiating with China for a number of years when I was at the State Department. And you would get a long list of issues that were unresolved. And the issue wasn't, say, if we had 15 issues that were unresolved, the issue wasn't to resolve those 15 issues. The issue was to find the 3 they really cared about. The rest were bones that they would throw at us to chew on. I think that right now, Chinese companies, they want access to chips. The Chinese government, not so much. And so I think this is one of the bones they've given us to chew on, where do I think it's good for the U.S. economy to sell more chips here? Absolutely. Do I think this is keeping China up at night, that they're not getting Blackwell chips? Yeah, probably not. And the most important thing is the way they talk about it. When I talk to Chinese businesses, entrepreneurs, academics, scholars, and most importantly, people in the government, and if you ask the question, who's winning on AI, they give this look like, what does this mean? What is this winning of which you speak? And they don't see it in those terms. What they see is, they see not a race to AGI. They see a race to deploy AI into every business, every school, and every sector of the economy. And what I see are companies, whether they're Chinese or foreign, racing and pushing AI out into every aspect of their business operation. And I think in the minds of the Chinese, that's the goal with AI, is to push it out and drive efficiency.
.29 a.m. in Tokyo. Japanese markets heading to that lunch break here this morning. We continue to see, of course, this downdraft. Nikkei 225 still down by about 2%. It is still the tech plays that are still selling off here today and really kind of thawing that fuel that we see in Korea for another day here as well. But that downdraft, you can feel it across the region. Even China stocks and tech stocks are feeling that sort of downdraft here this morning. Dollar yen just below 153 levels here. Not much to really talk about there.
Yeah, some of the big movers there, in fact, just to Yvonne's point, right, there doesn't seem to be a lot of appetite for risk-taking. In fact, it seems like things are getting worse just in the last hour or so, just looking at price and just looking at how some of the big winners so far, like SoftBank, has had a terrible, terrible week. We're down about 8.5% on the price, and just the pull in the Nikkei, too, enough to pull the Nikkei down. Not just SoftBank, of course, 1,100 points there. We're down about 2%. Similar losses also we're seeing in Korea by that amount. So it doesn't seem like we're done with this. And it's, just keep in mind, of course, we're coming up a bad session in the U.S., down 1% in the U.S. Right, very quickly, let's have a look at PopMart here. So we were down there on that stock. We're down 4.5%. That's down to this live streaming incident where I understand this...
it was an employee.
Someone was overpriced.
Well, no, they were caught on camera holding this blind box, suggesting it was overpriced during this live streaming session. This is according to local media, The Cover reporting this as well. That's funny that that's what led to the stock to lower. But yes, that's what's going on. But that's what they're attributing it to, at least for now.
Yeah. Well, that's how much the world has. We've come to this, right? There's a blind box, and then there's a price. You don't know what's in the box, but you're willing to pay. But anyway, that's more a conceptual issue.
But basically, the winners of this market so far, like the PopMarts, like the SoftBanks, are all kind of heading the opposite direction now, as well. Let's talk a little bit more about where things lie when it comes to geopolitics as well. I head back to the China International Import Expo in Shanghai, where Bloomberg's Stephen Ingle is with our next guest. Hey, Steve.
Hey there, guys. Obviously, in the last week or so, the U.S.-China commercial and political relationship has taken most of the world's attention. But, of course, the European Union as well has a significant trade relationship with China. They've sort of been caught in collateral damage because of the global trade war. Let's get a pulse check of where European and Chinese commercial relations are right now with Carlo D'Andrea. He is the EU Chamber of Commerce in China Vice President, as well as the Shanghai chapter head.
Good morning.
Good morning. Buongiorno.
So it's very, very good to meet you again here at the CIE.
how would you say relations are right now, trade relations? Obviously, there's a truce between the U.S. and China right now. The Europeans have had similar complaints about export licenses on rare earths. Where are we right now?
We are following up the meeting that President Xi had with Trump in Seoul. Is a good beginning. We want to see a bit the implementation of this agreement. Export control is definitely one of the main issues that European companies are facing now here in China. Already in July, during the EU-China Business Summit, as a European Chamber, we had the opportunity to speak with the Chinese leadership, and especially with the Minister of Commerce, Wang Wentao, to ask a task force in order to boost the issuance of this license. At the moment, we are seeing some progress, but still is a lack of continuity and fluidity in the process.
It's not resolved because there were production disruptions throughout Europe from or here, just because of the supply of magnets, supply of critical minerals from August and September, and you say it has not necessarily been resolved yet.
I would say that there's still things to be done. We have still our members that they are telling us that they have a problem in Europe, but also a problem here in China, because many of these products are utilized here in China to be used in the local market. So we want to highlight that it's important the political talk, but they need to implement the procedure as fast as they can.
Right. So you've seen some discrepancies on the speed at which export licenses are granted, right? Sometimes really fast, sometimes really slow. Has that clarity, has there been more clarity since there is a truce? I know you didn't have a truce, the U.S. and China did, but you're kind of caught in the middle on that.
As always, you know, like it's the Europe in the relationship with China and US, they always have the side control effect.
Yeah.
So good that they had this meeting in Seoul. We want to see what's going to happen. You're right, there are very differentiation between the sector, between where you are based. But overall, what we are saying here to the Shanghai authority is they want to advocate to the central authority to have a more precise procedure that once you set all the documents, when you apply, you know exactly when you're going to get it. Because we have companies and members that they are losing millions per day.
Obviously, Li Chang, the premier, was here at CIIE. He was talking a lot about boosting consumption. We all know that China needs to boost domestic consumption to rebalance its economy, to get the households to spend right now. Confidence is pretty low, though. Retail sales have been extremely sluggish. So an event like this is intended to at least promote the importation of goods from around the world. How useful, I'm not necessarily getting you to criticize it, you did a couple of years ago, but is this working? Is China importing more? And do events like this help the Europeans?
So we would like to specify that we are the voice of European business here in China. We speak after data. And what we want to say that the CIE, the original idea was the one to help to eliminate the trade imbalance or reduce the trade imbalance between EU and China. At the moment, it doesn't work because we see over the year the trade imbalance is growing. So what we suggest is to come back to the original core of the CIE, to the one to bring to China new European product, new international product, never seen before, in order to boost the relationship, in order to bring more new small and medium enterprise. Because at the moment, the pricing that they are applying for this booth, beautiful booths, I believe you showed to your public, are very expensive. There are other cities in the near region that they even offer tickets, flight tickets, booths for free in order to attract small medium enterprise to come to China and to sell and to see for the first time China. I believe that the CIE should come back to that. And regarding the sentiment, I want to say that the consumption in China grow by 4.4%. So in Europe would be a great news. The other issue is that the manufacturing output grow by 6.2%. So you have more things in the market that the one people can buy. And this is one aspect of the Li Chang's speech was the one to recalibrate the overcapacity or the irrational competition that they mentioned. We hope that is going in this direction because the competition price on our members are making them rethink their strategy here in China. China.
How dire is it right now for example, let's pick one sector, European automakers. They've lost the top spot to Ito series in the luxury space, a Chinese domestic EV. They're playing catch up. We're getting a report from other media that Porsche is considering a gradual withdrawal from China because of diminished deliveries in this local market. The Xiaomi SU7, some say, is an almost exact copy of a Porsche. What does this represent as far as the future of European automakers, a key industry for Germany?
Okay. We do believe that China is a fitness center for our members, so you have to be here not only for the market but also for the innovation ecosystem. Of course, the new energy vehicle sector in China is a success story because you've seen in a few years they become leader in the sector. The other issue is that we are seeing, this was news of the last summer in July, the consumption luxury tax threshold was reduced from 1.3 million renminbi to 900,000
So
renminbi.
more European cars were taxed at the higher level.
Yes,
yeah.
For an additional 10%. So it's another way to say, you know, guys, beautiful product, but if by Chinese.
And that, again, benefits the local players. Very quickly, well, actually, we've run out of time, but you're coming out Wednesday with a new paper on Shanghai.
Yes.
We're going to have to talk to you again about that.
Thank you. We want to give suggestions to the Shanghai authority in order how they can improve to invest in Shanghai and let Shanghai to become even more international as today.
Well, they initially planned to have Shanghai be an international finance center by 2020. The pandemic happened.
We're going to catch up on that.
We're going to catch up next week. Next week, we're going to talk about it. Okay.
Thank you.
More from the EU Chamber, of course, next week as they come out with a new paper on what they suggest China should retransform, if you will, the financial capital of China, Shanghai. Back to you guys.
Yeah, SIFC is something I haven't heard in a while. Steve, fantastic conversation there. Stephen Engel in Shanghai at the Export Expo. On that note, just speaking of import-exports, we're actually going to get a data point on that today, imports and exports. The trade balance, as you can see, is at 97. That's the expected. Could come out, in fact, any time now. Big picture view on the trade balance and this export powerhouse that is China. 12-month moving average, and we're nearing 100 billion monthly on this export machine.
Yeah, I mean, there's a seasonal factors, high base, you know, as Min mentioned, that might lead to why we're seeing a bit of a slowdown in those numbers for this month. But certainly, you know, now that you have seen a truce between the U.S. and China, you know, maybe there is a case to be made that, you know, the export numbers can continue to stay pretty strong. Moving up, and that trade surplus can remain quite high. Coming up, though, we're going to talk a little bit more about, of course, banks. DBS Bank has reported higher than expected earnings supported by sustained momentum in its wealth management business and robust trading income. The DBS CEO discusses bank earnings and the outlook next. This is Bloomberg. Well, DBS is looking to take advantage of an influx of institutional funds diversifying into Asia. The CEO, Tansu Shan, spoke with Inside anchor Haslinda Amin earlier today and discussed their outlook.
A lot of the directional winds will be on where interest rates go. For DBS, we've already factored in lower Singapore SORA rates, and that's because Singapore rates have already gone down a lot more than the US rates. US rates have been 2 rate cuts. We're looking at 3 rate cuts. For us, actually, if US dollar rates go down, our cost of funds go down because we have a net floating liability in US dollars. So actually, it's not a bad thing for us. It's actually a net positive. We've already suffered the lower Sing dollar rates. And so the key thing is for next year is how do you keep the volume growth going? But that's deposit growth. How do you keep the wealth management momentum going? That's both net new money, new to bank customers, as well as more, you know, bedding down of these wealth management clients. And then the big sort of other vertical growth area, I believe, is the financial institutions group. Global investors are now looking to diversify. Many are looking towards Asia, Singapore, Hong Kong, China, etc. And that's our game to win. So really, we've got to kind of increase our penetration of the global institutional investors as well.
How confident are you in countering that squeeze on margins?
Well, I think it's a balance. I mean, the margins on interest rates were a price taker. However, what we have done in the last few years is we've been very nimble on hedging. You know, it's a little bit, if you're hedging now, it's a little bit too late. So you would have had to start years ago, and the team started years ago, so that's good. So we have hedging already, both on the interest rates and on the FX. So, you know, if it goes really big either way, we're protected either way. You know, but of course, next year's, you know, new hedges will have to come in as the old hedges melt away. And so our issue will then be finding, you know, good opportunistic pricing to come in with the new hedges.
The wealth business has been a boon for DBS. We're seeing lots of wealth creation in the region, especially in Hong Kong, where, you know, IPOs are closing in on $40 billion. Is Hong Kong the key market for you when it comes to the wealth business and where growth is going to be?
Hong Kong is a key equity capital markets hub. It's the largest equity capital markets in Asia. There's more IPOs there than anywhere else in the world. And there's a lot of wealth creation in Hong Kong. Hong Kong is back. Right? Hong Kong is buzzing with activities. Hong Kong has the resiliency that one should never underestimate. So Hong Kong is back. And that's great because we're, you know, the fourth largest bank in Hong Kong. We've set up wealth centers there. That's been doing well. There's been a lot of flow in Hong Kong, both into the stock market and into the bond market, actually. So it's both. Singapore, as a wealth hub, has also done well. It's more of an FICC market, fixed income, FX commodities. But both financial hubs have seen great activity.
There you go. That was Tan Su Shan there with Haslinda, of course, and that conversation on the trends and how they able, I guess that's a price tick as it pertains to margins. If you're one of our subscribers, you can rewatch that interview. They covered really a lot of things there with Has, and you can do that via our TV, our interactive TV function and TV Go, and also become part of the conversations here. Any questions for us, of course, you know how to reach us for our clients. Check it out, TV Go, plenty more ahead. This is Bloomberg. A rally in Hainan-related stocks, everything from some infrastructure plays to some of the actual on-the-ground businesses there. This is on the back of Chinese President Xi Jinping, his trip to Hainan. Dominating coverage in China's domestic media today, including in the People's Daily, with reports quoting his call for the province to develop a modern industrial system. Let's bring in Min Min Lo, our China correspondent, to give us a context here on this trip.
Yeah, so Hainan looks to be a very important pillar now for China as part of its opening up, because Hainan always had enjoyed a special status. They had been piloting a free trade zone there, and now with this trip, the Chinese government is announcing that starting from December 18, they are going to implement a two-tiered customs system so that goods traded between Hainan and the rest of the world can enjoy zero or lower tariffs. But then if they were to use Hainan as a gateway to enter the rest of mainland China, then they will have to go through normal customs procedure unless they have at least 30% more value-added processing in Hainan. So what this means is that it will increase Hainan's favorability as a choice for foreign companies to make it their manufacturing hub if they want to export goods into China. And already Hainan has a very favorable visa-free policy. Yeah, they extend it to over 80 countries, and if you've been there, you know that it's a heaven for duty-free shopping. There are a lot of these malls there, also for its beach resorts, surfing and all that. And so far, that free trade zone has already seen very strong performance over the last 5 years. If you look at the data from China Daily, for example, you can see that their foreign investments growth over the past 5 years annually averages about 14%. Newly funded foreign enterprises has increased about 40%, and goods and services traded increased about 30%. So they're doubling down on the strategy to open up that free trade port further.
All right. Certainly, as you say, right, coming at a time when flows to the U.S. when it comes to trade are declining. They're looking to boost trade all around the country. We're expecting these trade numbers to come through any moment now. What's expected?
Yeah, so we are expecting to see a pullback in the trade numbers because we had very strong numbers last month, right? Around 7 or 8% or so. We are expecting to see somewhere between 2 to 3% for both exports and import growth in October. And that's partly because of the very high base last year. Last October, we saw a 12% increase in exports. That was the highest in more than 2 years because that was when all that export front loading had just begun over this anticipation of the US elections and the possibility of Trump returning to power. So now we have already seen many, many months of front loading, and it's taking a little bit of a pause now, especially with Trump and Xi meeting and the dialing down of tension. So you can see exports expected to grow 2.9% and imports by 2.7%, which reflects that weak domestic demand still, despite all that government efforts to boost spending so far.
All right, Min Lo, thank you, our China correspondent Min Lo there, as we wait for the trade data to come through here any moment now. Now to some other big stories that we're tracking for you today. Online fast fashion retailer Shan expects net income to nearly double to $2 billion this year. That's as higher profit margins help offset the drop in traffic from President Trump's tariffs. Sources say Shan is also forecasting mid-teen sales growth for 2025. The upbeat outlook comes as the company works to retain investor confidence amid a long-delayed IPO and global regulatory scrutiny. Huawei is taking a direct aim at Apple's iPhone Air with a new product called the Mate 70 Air. The handset is just 6.6 millimeters thick and priced at about $590. That's compared with the $999 for the Apple product. Now, China's smartphone makers are showing a greater willingness to confront Apple, with Xiaomi rebranding its flagship lineup as the 17 and 17 Pro. Diageo cut its full-year sales and profit outlook as weak demand in China and the U.S. weighs on results. The maker of Johnnie Walker and Guinness now expects revenue to be flat or slightly lower this year, trimming its profit forecast as drinkers trade down to cheaper brands. Not just to cheaper brands, but maybe just less alcohol, less liquor.
Or no alcohol.
Yeah.
I think there was a fantastic piece. Was it last week? Very recently. It was probably in the last week.
On alcohol stocks.
Yes, 830 billion that was wiped out. And so I think we put that actually, so that specific index, we have Bloomberg as an index of effectively the booze makers, big, medium, small cap, across the different liquors. So the market cap of that was the one that was measured there. So what we did was we put that same index on a chart, and we actually looked at the PE.
Yeah.
Which is interesting, right? Because we were talking about this during 5 years ago, during the global pandemic, when alcohol sales went through the roof because people were not traveling.
They were stuck at home. Not much else to do.
I mean, work from home took on a different meaning, really. But since that point in time, the shift towards less drinking has really depressed this. So at the valuation perspective, right, this is trading at multi-year lows on the specific index. It's not just Diageo, right? We look at some of the big liquor makers in China. They haven't partaken in this rally on the CSI.
Well, there was also this sort of ban on booze, right, when it came to official functions in China as well. So that's added fuel to this sort of downtrend, and then you add the whole weak household confidence in China. That's also leading to why, Kweichow and some of these liquor makers, baijiu makers, are not doing as well, right? So certainly it is a structural sort of change that we're seeing across this industry, right? These changing health habits and the like. Something that I don't know, as millennials, I'm still kind of scratching my head around.
Why?
You know why. If you know, you know. Come on.
I was invited and have, since the invite, have defriended the person.
Oh, no.
I was invited to a coffee rave.
Oh, at night?
Yeah, well, it was 4 p.m.
Okay.
What time is our last coffee? Our cutoff is like lunch.
Probably 4, or even before that.
Before that, right?
Or else I can't sleep.
Yeah, so anyone who thinks about inviting me and Yvonne.
A coffee rave.
Whereas, when was your last vodka Red Bull?
Oh, gosh. That brings me back to my college years. Gosh.
Your last beer, when was it?
Tuesday. Don't put me on the spot like that. Come on.
Well, no.
It's Friday, so yes, it's going to happen sooner than later, okay?
Yes. And you know what? I was with Yvonne when
we were there. It was a big day.
You can check out our social media. Maybe later. We'll see if we'll post it. But yes.
I'm too honest. Why did I say that?
What time was that?
I'm like, Tuesday.
Okay, before you say the time.
Big week
Yes,
coming up,
let's
right?
go to this.
Let's not talk
Yes.
about drinking much longer, although it is Friday and we're very excited about that. Yes, so a big week coming up. We have data, we come about, big corporate releases and the like, right? So results are coming through when it comes to Tencent on Thursday. The China tech sort of earnings are kicking in a little bit. Inflation data coming out in China on Sunday, that's first and foremost. And then, of course, it's 11/11, although it already feels like 11/11, right? Singles Day.
People have been already on their promos right now, so it's a busy weekend and week ahead. So on that note, we will see you all on Monday, dark and early. This is the China Show.